You're watching CNBC Africa, and this is your week's edition of Invest Africa. I'm Alicia Seckham. Well, Africa will be the world's new retail growth story within a decade. This is according to a recent report by Barclays, with countries like Ghana, Kenya and South Africa standing out as the most preferred retail markets, and that due to the rising middle class and the take-up of mobile technology. Philani Nyalunga filed this report.
Africa continues to grow strongly despite the global slowdown. The continent is now making its mark in the retail sector. According to a recent survey by Barclays Bank, which questioned retailers on their expansion strategies, nearly a quarter of retailers surveyed stated that Africa is the next retail frontier.
The groundwork has already been established certainly for the commodities industry, for the mining industry, to start developing a lot of projects in Africa, and obviously that brings enormous job opportunities and then secondary and tertiary job opportunities, which ultimately of course leads to huge growth in retail spending. And perhaps that's what people are looking at right now, that Africa is in a way a huge undeveloped continent, and as that development shifts to Africa, you're going to see a lot of economic growth.
Ghana, Kenya and South Africa have been named the most preferred retail markets due to a growing middle class and the take-up of mobile technology. South Africa ranks top of the list, according to 18% of the retailers that were surveyed. Ghana and Kenya were the second and third choices, with 6% and 4% respectively. Nigeria is also making its mark, as it is one of the largest consumer markets worldwide and is growing by 3% annually. The acquisition of South Africa's Massmart by America's Walmart is one example showing just how seriously global retailers are taking the continent, but there have also been criticisms around these big global players entering the African market.
Right now, I don't really think that acquisition has had any effect at all. That doesn't mean to say it's not going to have an effect. I think we've got to look at this thing in terms of a journey. Massmart's acquisition by Walmart wasn't predicated exclusively on gaining an entry into Africa. I think, you know, they paid a lot of money to buy control of that business, and the first objective is obviously, I think, has been to let's say expedite and gain maximum efficiencies and market share out of their core business in South Africa. I think we've got to understand that Massmart's core business is and always has been in South Africa. The secondary objective, I think, which is going to come in time to come, and I don't know what that time frame is, it could be a decade, will be the acceleration of Massmart's operations into Africa. But, you know, moving into Africa has a lot of challenges and pitfalls. It's not as simple as just putting down stores.
Although the USA and China remain firm favorites for British retailers, many of the trends which have driven the economic development of emerging economies in Asia and the USA are beginning to take hold in Africa. Philani Nyalunga, CNBC Africa, Johannesburg.
Well, joining me in studio to give us analysis and impressions about the African retail sector are Brett Latimer. He's CEO of Oxford Fresh Market. Also with us at the desk is Humphrey Gathungu. He's portfolio manager at Stanlib. Joining us from our Lagos bureau in the meantime is Haresh Keswani. He's managing director at the RT Group. So welcome, gentlemen, to this conversation. And Brett, let's perhaps start off with you, because we hear time and time again that Africa is in fact open for business, and the attention from an investment perspective is moving away from just the extractive sectors to the African consumer as well. At the top, run us through what investors are buying into here, because this is a segment of the economy that you've bought into a couple of times now.
Thank you for inviting me, Alicia. As far as I'm concerned, Africa has got 1.1 billion people, the 800 million people in sub-Saharan Africa. We have 54 million people in South Africa. We've got some incredible retailers, and we have an emerging middle class, which I'm told is set to double in the not too distant future. The opportunities to retail in South Africa and expand into the rest of Africa are astronomical and almost unlimited at this point in time. So from my perspective, retail food in particular, obviously apparel, etc. But for me, food, clothing and shelter, I'm going to stick with the food currently and work on exactly that. So Oxford Fresh Market, first store into the ground, been trading for a year. We're in Africa. It did just over 400 million rand in its first year, out of just under 2,500 square
coming
meters.
through, and Humphrey, I mean, it's healthy enough growth compared to our developed world that we're seeing coming through on an economic basis. We've got the sizable populations that Brett has highlighted there, boasting a rising emerging middle class and then a strengthening purchasing power as well. With the services sector standing out as a major FDI recipient at this stage, to what extent do we need to start reassessing FDI in Africa and where it's being pumped?
Certainly, I agree with what he said, and FDI into Africa, especially into infrastructure, I think will open up a lot. You'll find some of the challenges that retailers face is getting adequate properties in, adequately located nodes that shoppers will find it easy to get in and out of. So I think FDI coming into Africa and coming into the to address the infrastructure gap that we're seeing on the continent will certainly go a long way to addressing the opportunity that the retailers are seeing on the continent.
Yep. Well, we've got Haresh joining us from our bureau in Lagos this afternoon. Haresh, South Africa, Ghana, Kenya aside, we had the insert highlighting that Nigeria stands out as one of the big consumer hubs as well. And if you want access to a rising African consumer, you want to be in Nigeria. We had the RT Group having started off as a wholesaler back in 1988. It's more so known for the fact that it manages the Spar franchise outlets over in Nigeria specifically. So as a player in the space, give us a sense of the operating environment from your perspective.
Thanks, Alicia. The situation in Nigeria is very simple. Everyone knows for the fact that we've got a huge population and a rising middle class. And I'm quite surprised to see Nigeria's name has been omitted by the Barclays Bank report. In fact, I would only have to say one thing here, that Nigeria, I believe, has got the highest potential in the retail growth compared to Ghana and Kenya. And where South Africa is concerned, I think it's quite a matured and a developed market. So if a good retailer is looking to make a good investment, then Nigeria is the port of call. However, we do have issues in Nigeria. We all understand that the consumer is ready to buy, the consumer is widely traveled, and he or she understands good quality. But currently the infrastructure which is currently available for the retail growth is almost non-existent. Now that is the biggest hurdle, which I believe the government needs to look into it, because it's a known fact the government is looking to create employment, and retail is the platform which will create that employment. So with the infrastructure development, I think Nigeria is the next port of call, while we who are already here have an aggressive rollout plan.
Are governments, Humphrey, in your opinion, doing enough to leverage off the appeal here and off this potential FDI? Because from a regulatory perspective, we've certainly seen in South Africa the kind of red tape that could come to the fore when you're looking at a foreign player. And let's use the case of Walmart coming in for a local player like Massmart.
Certainly, and I agree with Haresh that Nigeria is certainly one of the most attractive spots for retail in Africa. As to governments and whether they're doing enough, certainly there are certain signs on the ground in terms of making it easier to open and do businesses. But I reckon that the pace needs to be quickened quite a bit, because there's a lot of ground that needs to be covered. If you look at retail penetration in Africa, it's still very nascent and very, very low, and therefore the opportunity is very big for governments to try and address that gap, to make it easy and accessible for them, and to also make shoppers and the products offered to be safe and good quality. And I think the payback to governments will be they will see certainly an increase in tax revenues that they'll be able to address, because as you know, for governments it's a lot easier to have indirect taxes in form of VAT and the sort, as opposed to direct taxes, and this will be certainly a way for them to increase their fiscal balances.
Absolutely. We've heard it highlighted before that unlike investments in the extreme extractive industries as such. You've got investments in consumer-orientated sectors, often leading to creation of many more jobs. It stimulates consumer spending. It brings in that infrastructure, setup that needs to be there to support business as a whole. What's your assessment of the regulatory environment and whether or not we are in fact open to doing business from a South African perspective, Brett? Because yes, you've set up Oxford Fresh Market now over the past year, but prior to that you had set up Cambridge Meat and sold that on after expansion to Massmart.
That's right. Humphrey's absolutely right that with governments taking the approach, or our government in particular taking the approach that VAT revenue, etc., will stream into the coffers or the state coffers through business, through retail, is absolutely on the button. My sale of Cambridge Food, which Cambridge Meat became, to Massmart was part of my own exit strategy and part of their entry into the South African market to start understanding it. The biggest hurdle that we have, I believe, in sub-Saharan Africa, in particular South Africa, is to convince the public and the people of South Africa and the people of sub-Saharan Africa that we've actually got it in the palm of our hands. It's right here with us. So the retail opportunity is not going to happen if there's too much crime. The retail opportunity is not going to happen if we're not cognizant of the local people's requirement to get on the bus with us and empower our local populace and ensure that we make a sincere contribution to that middle class in South Africa and Southern Africa, so that we have a sustainable climate where people can retail, can trade, where the government can govern and facilitate the growth into the rest of Africa. I do believe South Africa has a massive role to play.
Yeah, let's take a look at the strategy you've employed in Nigeria, Haresh. Talk us through that, and how exactly you've grown your business, because you operate several stores spread across a large retail space, and we touched on your exposure to the Spar franchise, but you also manage Park and Shop retailer.
Yes, Alicia, we are celebrating our 25th anniversary this year on 8th of August. So we are actually 25 years in retail in Nigeria. Now, we all know the Nigerian retail industry in the late 70s and the early 80s was a very huge industry. But however, due to certain economic conditions, all of the retailers disappeared. And in 1988, when Park and Shop opened their first store in Victoria Island, the retailing was an upstart once again. And it has taken us many years to get back to the international levels. And working with Spar has helped our group for once, and we have got that levels what we desire. Our rollout plans are very aggressive. However, the hurdles on the infrastructure, like I earlier said, and coupled with the lack of retail policies, and I repeat that, lack of retail policies, whereby none of the government agencies understand retailing is a professional and a very technical trading methodology, and they confuse it with manufacturing and bulk trading, which is not the case. We came up with a solution as few friends put our heads together, and we have formed now a Retail Council of Nigeria, which we look to launch sometimes in the month of August. Now, the Retail Council of Nigeria is the platform which we want to use to start communicating with the various agencies and the ministries at different levels to get them together and agree on a single path which will drive the retail and create what we call the employment and also fulfill the needs of the aspirational consumers.
Okay, so some strides still needing to be made, well, big strides, significant enough stride. Humphrey, when it comes to growth strategy, organic growth is certainly tricky. I mean, we've seen the likes of South Africa's ShopRite and Spar as well get it right, but it's taken time. It's taken a slow and steady approach as well. And some saying that, as South African operations, they hold an African mindset, so that it's a feat that... And that's a feat that's not possibly easy to replicate. What's your view and your view on what's more viable, organic, acquisitive growth?
Certainly, I think it should be a mixture of both, because in certain markets you'll find that the retail space is already quite developed. Take in mind a place like Kenya, you already have retailers that are quite developed and they have a good share of the market, and there are local retailers like Nakumatt, like Uchumi supermarkets. So in that place, I think more of an acquisitive type of growth might be what is required. In some markets like Nigeria, I would think, and some of the small markets like the DRC or Ghana, where you do not have significant penetration of retail, I think in that particular place you would see organic growth. The challenges obviously would be, like I mentioned, the infrastructure from that point of view, and also backward integration, because you'd want the retailers to be able to source as much of their produce locally rather than importing it, and that would certainly be a challenge.
Well, growth in the face of what challenges? After the break, we'll be taking a closer look at just some of the hurdles a retailer would have to clear in order to reap optimal return on investments. That's with both the retailers Choppies and Nakumatt. At this point, though, we say goodbye to Haresh Keswani, who's Managing Director at RT Group, and also Brett Latimer, who's CEO of Oxford Fresh Market. When we return, we get the views from Kenya's retailer Nakumatt, also the investment outlook of Choppies stores in the SADC region. So we'll see you back straight after this. Welcome back. You're watching Invest Africa, and still with me today is Humphrey Gathungu. He's a portfolio manager at Stanlib. Joining the conversation at this point as well is Ramachandran Otapath. He's the CEO at Choppies, and joining us from our Nairobi bureau is Ramamurthy Thiagarajan. He's a regional strategy and operations director at Nakumatt Holdings. Welcome to all of you, and thanks to Ramachandran and Ramamurthy for joining us this afternoon. Humphrey, let's just pick up with you here, because in the first part of the show we were exploring some of the challenges that a retailer faces in setting up shop on the continent. The first thing that seemed to have cropped up is effective distribution networks and then infrastructure that is supportive of that. Just how much of a challenge is it in your books?
In our books, when we look at the retailers, obviously we're looking at investing in a wide number of retailers, and certainly they state that as quite a bit of a challenge, and it's one of the biggest challenges. From a growth perspective, I think we also see affordability as being yet another challenge that they must take into account. I remember reading a report by SAB Miller who said that, for instance, it takes about an hour's labor in South Africa for you to be able to afford a beer, but that goes up to about 2 hours when you go to Nigeria or Kenya. So that tells you the level of affordability. So when you look at the opportunity and look at the rising middle class, the more that middle class rises, the more the products will become affordable to them.
Ramachandran, let's look at site selection, because that's paramount. In your books, have the latecomers missed out? Because I'm saying the easy markets, the major cities, are well penetrated, and opportunities now lie in the more remote centres of any economy.
In Africa, the site selection is always going to be a challenge, because the population is living in remote locations, and to make a business sustainable with a smaller population is going to be a challenge always. And we always find that getting goods also to those locations is going to be a challenge.
How has this impacted the way you do business, how you do business?
It's a significant cost, especially the logistic part is a significant cost on getting into locations. And it's going to be a challenge. It's not going to be, and urbanize, even though the talk of significant urbanization, it is still going to take a long time to get to the levels of urbanization, and the polarization of population is going to take time.
Ramamurthy, let's get your perspective on this. Talk us through your experience when it comes to effective distribution networks and infrastructure. We've seen many of South Africa's retailers, for example, start to focus on centralized distribution centers to manage that cost base a little bit more effectively. Your experience with regards to that?
We do not have much of a challenge in Kenya in terms of our logistics. But we have possible challenges in transferring the goods to Rwanda, even Tanzania, and also in Uganda. And these are all the challenges that we have. Within Kenya, we are able to manage without much of a difficulty, even though the road network is being developed, and we are able to manage not much of a problem. But at the end of the day, if you look at the modern retail, it is again a 80-20 scenario, and 80% is informal sector and 20% is the modern retail. And there is a lot of scope and opportunities wide open. So that is why we have come out with different formats. And we have got the hypermarkets, we got the supermarkets, and we also have the convenience stores. And we are also planning to introduce the express concepts, so that at least we can reach out to all the people across the country.
Ramamurthy, it's interesting that Ramachandran rather, it's interesting that Ramamurthy has highlighted this. I mean, let's start looking at how you position yourself for profitable growth in a post-recessionary environment here, because things like customer reach comes in a very big way, you know, tailoring your products to meet specific segments and specific channels. How much attention do you pay to economic data when you start looking at where you're going to be doing business and how?
We concentrate mainly on the economic data to make decisions. Those are only informed decisions, actually. Mm-hmm. We analyze the economic activities in an area, plus the development prospects surrounding in that area and the population growth. Mm-hmm. And if you look at South African retail, without any foreign influence or anything, it has done reasonably well over the years.
So that's exactly why, I mean, you've started off in Botswana, yes, and now moving into South Africa, which is, yes, interesting, because we see many retailers looking at retailers, other industries as well, looking at South Africa as the gateway to the rest of Africa. You're doing it in
the reverse direction. Yeah. Yes, we've been operating in Botswana along with these major retailers in South Africa for the past 15 to 20 years, and we felt it is time that we organically can grow into the neighboring provinces in South Africa. That's what exactly we did. Mm-hmm. And we reasonably did in 1 year. In 2 years we got almost 17 outlets in the Northwest and Limpopo provinces.
Humphrey, now more than ever, it's possibly most important to think about the market that you're targeting, who you're catering to right now. What sense are you getting of the African consumer and where they're spending? Because a lot of the focus is shifting away from your discretionary items as consumers' pockets come under pressure, and focusing on you know, what you need, the must-haves.
Certainly, and we certainly see that, and we like the defensive nature of the staples that a lot of the retailers are able to offer. And the reason we like that is in an environment where growth is very constrained, if you look at the developed world, and also if you look at in Africa, while still growing very strongly, there's still a lot of challenges. So we like that defensive nature that the staples, the must-haves that you have, you know, food is something that you cannot do without. But more importantly, there's also a growth opportunity, because like I mentioned earlier, that the penetration of retail is still very, very low. If you look at Africa's population, it's still very, very rural population. About a third of it is rural and projected to be about 50% urban. So as you move towards that urbanization, then you will see more and more people needing to buy from a store, and hence that is a growth aspect. So to us, it's something that's almost perfect, because you have both the defensive nature and a growth nature coming in from the increased penetration.
No matter how defensive your product is, though, Ramamurthy, you've got to take into consideration affordability. So what's your assessment of the pricing power you currently hold?
Let me tell you give you some statistics today. You look at the East African, the population and the market today. For the formal retail, it's about $7 billion US. That is a kind of a market which is available. And there are only about 3-4 homegrown players who are managing this one as of now. And there is a lot of potential for many people. They are looking at this market as a potential market for themselves. And in spite of the fact that not all the products are made in East Africa today. If you look at about 55% of the product portfolio are available locally, and more than 45% is coming from outside. And that is the logistic challenges that people have. But Kenya has got a port. We are able to manage that one. But landlocked countries like Uganda, Uganda and Rwanda, I think there are some challenges. And the pricing for the customers, when it reaches there, it's totally different from what is available for the Kenyan people here. Mm-hmm. The population is growing, and the middle class is slowly growing in Kenyan market, we have seen. Even in East Africa, slowly it grows. But that is a very big opportunity for the people to develop the modern retail in this country today. Yeah. And one more benefit what we have in the East Africa today is the skill availability. The people are available for employment here. And that is not a big deal. the cost is not very high for you to come and do it here. There is a lot of real estate developments which are coming in here, and then we could see down the line in the next 24 months, you could see a lot of shopping malls which will be a destination for retail shopping, which is all cropping up, and a lot of investments which are coming in here. A lot of local investors, the local the business people, they are investing quite a lot of money here. I could see more than about $200 million invested in the real estate for the shopping mall development in this country in the next 2 to 3 years' time.
Yeah.
And it's a great opportunity for the homegrown businesses to grow along with the destinations.
Well, it puts into the spotlight as well supplier agreements being pivotal to success, Ramachandran. And if you get that right, economies of scale, one would assume, would work in your favor as well, alongside that wider range of products. So what's your view on that and, you know, supplier agreements, getting them to work in your favor?
That's the most key factor in pricing strategy of the organization. Supplier agreement drives the prices, and without that we can't compete in a modern economy like South Africa.
Yeah.
That plays the most key factor.
Well, gentlemen, we're out of time. Unfortunately, we're going to have to leave the conversation there. Thanks so much for having joined me today. And that's it for this edition of Invest Africa. Big thanks to all my guests today. Humphrey Gathungu is Portfolio Manager at Stanlib. Ramachandran Ottopath is the CEO at Choppies. Ramamurthy Thiagarajan is Regional Strategy and Operations Director at Nakumat Holdings as well. Remember to join us again next Wednesday at 8:30 Central African Time, only on CNBC Africa. From all of us here, it's goodbye.